Hey guys, so in this video I'm going to be going over 4 stocks to buy in December of 2017. And I'm going to be doing just the brief reasons to buy them in this video, and then I'm going to be linking more in-depth analysis videos on all 4 of these stocks in the description, and I will put a card in the top right after each of these stocks with a link to the more in-depth analysis of the stocks. And if you're new to my channel, I make videos on the stock market and investing. So if you're interested in that, consider subscribing, and let's get right into the video. So the first stock to buy in December of 2017 is AT&T. The symbol for them is T. And I like AT&T first off because I think a net neutrality repeal would be good for AT&T. It would be good for most internet service providers and telecoms. So just politically, they have the net neutrality repeal, and potential for tax reform would be good for AT&T because they currently pay around a 30 or 35% effective tax rate. So tax reform would have a big impact on them. I also like them because they've been showing strong growth internationally. In Mexico and Latin America, they have been growing quite rapidly, and that's a good area for growth for them. I also like their valuation. They're trading at a 16 price to earnings and a 12 forward price to earnings, which is much cheaper than the overall market. And they do have around a 6% dividend that is covered by their earnings. So I don't think there will be any problem with dividend sustainability, at least in the near future. And they have such a high dividend, which is great to see. And they're trading at an attractive valuation. They also have a 6.8 enterprise value over EBITDA, so that factors in debt to the valuation a bit more, and they still are looking attractive in terms of valuation. And so they do have a lot of debt, but over 90% of their debt is fixed rate at around 4 or 5%. So I don't see that being a huge problem for them in the near future. It'll be something to monitor to make sure their debt doesn't get out of hand, especially if the Time Warner acquisition is approved. They will be taking on more debt to finance that, and so that will be something that you will need to pay attention to, but I don't see it as a problem right now. And then in terms of the Time Warner acquisition, I'm not really sure if that's going to go through. It looks like the Department of Justice is challenging the merger, and AT&T is going to fight that, so hopefully there aren't too many legal costs for AT&T fighting the Department of Justice, which is trying to block their merger. I don't think that they'll have to spend too much on that. I think it will be okay in the end. And I think AT&T will be fine whether or not the merger is approved. If it's not approved, I'm sure Wall Street will like that because it will mean less debt for AT&T and a higher credit rating for them, which would be good. But I do think the Time Warner acquisition would be a good buy for AT&T. It'll give them a lot more content. So I guess I'm sort of neutral. I think they'll be fine either way if the merger gets blocked or if it doesn't get blocked. And then another good thing for AT&T is they've had very low phone churn recently, which means a lot less people are leaving their phone services. And then they've had people leaving their pay TV service, which is DirecTV that they own. But if they bundle pay TV service with internet, then the churn drops a lot on that. And so currently about 25% of their pay TV households are bundled with internet, but they're working on getting more of them bundled, which will drop their churn in that area as well. And then they also have DirecTV Now, which has been gaining subscribers, which is offsetting a lot of these subscriber losses from their traditional pay TV structure. And then finally, I think Apple Watches and other connected devices will be beneficial for telecom in general. That'll just be another device that people need a cell plan on, and AT&T can definitely capitalize on that. So all in all, I think AT&T is a good stock to watch in December of 2017. So now on to the second stock, which is Viacom. The symbol for them is VIAB. They own Nickelodeon, Comedy Central, Paramount Pictures, and quite a few other TV channels, MTV as well. And so they've been struggling a lot recently. They're down around 75% since 2014. And they are definitely a more risky pick, so be more cautious with this one. But I like them because I think in terms of valuation, they are very cheap. They're trading at 7.2 times earnings with a 6.8 forward price to earnings and a 7 enterprise value over EBITDA. So the valuation is very cheap for them. And they also have around a 3% dividend with a 22% payout ratio. So the dividend is definitely covered by their earnings. And so they had a lot of ratings declines in the past, but recently ratings on most of their major channels have increased, which is good to see. They also have new management in place, and the new management has been there for around a year or so, and they have done a good job so far. They've reduced debt by around $2 billion, and the channels are all doing better, so that's good to see. And right now there's a lot of consolidation going on in the media space. It looks like Comcast might be trying to purchase some of Fox's assets, and a lot of content providers might be getting acquired. So I could see Viacom being an acquisition target, which it's obviously more speculative, but I think that that could be another area where Viacom stock could go up a lot because they get acquired by someone else. But if they don't, I do think that they are a good value play. They're very cheap, and I think that they do have pretty solid TV channels and content, so that they will be fine even if they aren't acquired. So then the third stock that I think is attractive in December of 2017 is ExxonMobil. The symbol for them is XOM. And I like ExxonMobil because they're a strong, safe name in the energy industry. They're the largest integrated oil company. Integrated means that they have the upstream, the midstream, and the downstream. So pretty much they're drilling the oil out of the ground, they're refining it, and they're making all of the petrochemicals or gasoline or whatever with that. And that means that they are less reliant on the price of oil, because only their upstream segment will suffer when oil prices are low. And they have a very strong balance sheet. They have low debt and conservative management, which allows them to be strong in the long run, even if there are large fluctuations in oil prices. They've been able to raise their dividend every year for 34 years, which is a good sign, especially for a company that is so reliant on the price of a commodity, that they have been stable enough to raise their dividend every year for the last 34 years. And currently their dividend is around 4%, so they have a very high yield. Another benefit for them is that oil prices are up a lot recently. I think WTI was around $59 when I last checked it, so the oil companies will be doing a lot better now that oil prices are higher. Hopefully they can stay higher. I'm not exactly sure what will happen with that, but I think that will definitely be another benefit for ExxonMobil. And then some other growth areas. ExxonMobil said a few quarters ago that they're starting to roll out gas stations in Mexico. And they also have this project called the Liza development that they think can deliver them double-digit discounted cash flow returns even at $40 for the price of oil. So that will be another good development for them. And they recently purchased another aromatics plant. I think that was in Singapore. And they purchased a new oil terminal in the Delaware Basin, which ExxonMobil says establishes it as a key midstream provider in the growing Permian Basin. So I think all in all, they have some good areas for growth, and they are a very stable, strong company. So in the long run, I think that they will be a great stock to own. And so the fourth and final stock that I like in December of 2017 is Disney. The symbol for them is DIS. And I like Disney for several reasons. The first reason is just because they're a great company. They have a ton of strong brands. They have Star Wars, Marvel, and all of those. So that just makes them a great company in general. And so in the long run, I think they'll be good. But I also think that they're trading at an attractive valuation right now with an 18 price to earnings and a 16 forward price to earnings. It's a good opportunity to pick up a really strong company. And so I think they're currently in a transition period right now. ESPN has been struggling, and they announced that they're moving to their own streaming service in 2019. And so in their most recent quarter, they missed earnings, and they were initially down after hours, but then they announced some new things regarding their streaming service, and they ended up. So Wall Street clearly liked their announcements with their streaming service, which is good. And so I think that their streaming service will be able to fix the fact that ESPN has been struggling. And I think that they have enough content to be able to compete with Netflix on their own streaming service. They have just a ridiculous amount of content, so them leaving Netflix, I think is good for them, because they will now make money on the content and delivering the content to the end user, instead of having Netflix deliver it and make a profit off of Disney's content. And they've also shown very strong growth in their parks and resort segment and with cruises, so those are good to see. Right now, just their media networks has been struggling, while the rest of the company has been doing pretty well. And so I think with the streaming service, that will be able to bring their media network segment up to par with the rest of their company, and they will be able to return to strong growth. And so I think that makes them another very attractive stock to consider buying in December of 2017. So those are the 4 stocks that I am buying in December of 2017. What stocks are you guys watching right now, and what do you think of these stocks? Leave a comment down below, and thank you very much for watching. If you enjoyed this video, leave a like down below and consider subscribing.